Hello guys, welcome back to my YouTube channel. This is LFS Coach, and in this video I'll be showing you one of my Deriv accounts, okay, and how I traded on this account with a deposit of $38, and I made a profit of $71 in less than 2 weeks. Okay, so before I withdraw all my money, okay, I have a balance of close to $200, okay, but I made some losses that make me withdraw my money. Okay, so here are some of the losses I made lately. So I was on this trade first, so and this loss came in, so a spike came in, and I didn't fix my stop loss. Okay, I actually have a particular trading rule that I'm trading with. So I traded against my rule, okay, and I try to hedge against this loss so that I can recover and get out of the market with a reduced loss. And another spike came in, okay, and it continues to go like that. So I became aggressive. I didn't trade with my trading plan again. I just want to recover from the loss. So I use a one lot, okay, to trade from 300. And if you are familiar with 300, you will know how that it moves fast. Okay, so I use a one lot, and a very small spike gave me minus 30, and it brought all my balance back. So I don't want to become aggressive again, trading against my trading plan and all. So I just decided to withdraw out of the market. Okay, so the lesson that I want you to learn is that if you know you are becoming aggressive, okay, and you are not following your rules, it's better you just stay off the market, okay, and then call back another time to trade. Okay, so if you can see, I set TP, I set my stop loss, and I closed some trade when I'm scalping. So I'll just show you the exact strategy that I was using. Okay, so basically I wait for a spike to come in. Okay, so after the spike I count about 3 to 4 minutes up, okay, and I enter the market just right here. After 3 minutes I will set my TP. Okay, I measure 3 minutes and set my TP and set my stop loss. Okay, so the reason why I'm just setting my stop loss just below this the last spike is such that a small spike can come in and it will be recovered, but here is um the the level that I'm looking at, that if any spike will come below this, just take me out. I know boom and crash doesn't respect stop loss, but I don't want to be a victim of multiple spikes. Okay, so that's just the concept. I just want a single spike to take me out of the market, and I don't mind. So you continue picking just 3 candles, 3 to 5 candles, depends on how the trend of the market. In some areas like this now, if you are picking your 3 candles, you are safe. Okay, so this is the example I was telling you about. So if you put your stop loss a few pips right here, okay, and you enter the market here, let's say before it got to your TP, this small spike came in, it will be covered and it will move. But if you set your stop loss very tight to your entry, small spike can just take you out of the market. Why? Whereas it is supposed to recover. Okay, so you can just be picking your trades like this. So now let's say you enter for the market right here. The reason why stop loss is very good is that you only be a victim of this spike. Okay, all of this you're already out of the market. All right, so I think this is what actually happened to me, why I became aggressive. So I followed my rule to enter for the first entry, and then this spike came in, but I didn't fix my stop loss. Okay, then I enter for the market again. So when I entered for the market, I was hoping to recover. Okay, I wasn't trading according to the rule. I was hoping to recover. Then another spike came in, no stop loss, and it's becoming more intense on me. So I still want to make more and recover my losses. Then I still enter for another one right here with a bigger lot, just few pips, and get out of the market to recover my losses. And then another spike came in. Instead of you being aggressive on the market and making continuous losses, it is better to put a stop loss, let's take it out of the market, then continue with your trading rule. Okay, over time you just keep recovering from the loss. Okay, so this is what I use. Just, here I will not enter the market. I will not enter the market. I will probably not enter the market here because stop loss is here for the previous trade and just trigger TP. Okay, so this is what I use, and I have a money management tool that I've mastered. Okay, I'll just share this with you. So I know that when I'm trading boom 300, I get 0.45 per minute. Okay, I know I get $1.04 for 3 minutes and 2.25 for 5 minutes. So I already know the same for boom 500 and boom 1000. So I already listed for crash also. Okay, and when I want to edge against the market, like I want to recover some of my losses, I look for a best opportunity that I can use. So when opportunity is coming on boom 300, I know how much I can get for 5 minutes if I use a two lot. I know how much I can get on crash 300 if I use a two lot. How much I can get on boom 1000. So I already listed the first, that's the best moving, the second moving, the third. Okay, so I know the one I can enter with the lot size I'm using to edge against a particular risk. Okay, so I've already did my research. Okay, and I'm aware of all this. So before I take my trade, I just come, okay, how much will a minute give me? How much will 3 minutes give me? If I enter for this trade, how much will 3 minutes give me? So I already know. So imagine having a safe trade of 0.26, okay, times 50. Okay, you know how much you are seeing on a trade, and then you know that you are entering after a particular spike. So you can get multiple. And when a spike take you out of the market, it's just a recovery phase. And there's this thing that I did that I called edging that I just explained to you. So let's say a spike caught me right here. Let's say I enter for the market here. Okay, I'm expecting three candles, and my stop loss is here. Stop loss TP, and this spike comes in, take me out of the market. Okay, so I'll just be entering for a new position after three candles again. So I went around here, and then three candles, set my TP. My stop loss is here. Okay, so if my stop loss is here, then I can edge against the loss that I make here. I'm starting with the minimum lot. Okay, if I enter for 0.2 here, I can use 0.5 here. Okay, so that these 3 minutes will reduce the loss that I made right here. Okay, so you can just look around. Okay, let's say this actually gave us a loss because there was this spike. Okay, when we are entering to recover, if you use 0.5, okay, you can just raise you can risk one lot. Okay, so that the 3 minutes we reduce the losses that you make here, and you come back to your normal. So you don't, let's say you use 0.5 and you are using two lots to recover. Okay, that's the way too big, because if there's a second spike, you are becoming more aggressive. Okay, so but there are several ways you can edge yourself. Look at this massive spike now. It will give you a big loss, right? But you can edge around it just with three candles by doing your calculations. Okay, so that's just how I play around this boom and crash. Okay, boom and crash is a manipulated market, we all know that, but there's a way we can edge against double spike like this. And when the market is in a spike zone like this, that's why waiting for three candles is very good. It will protect you from multiple spike. And that's why I use stop loss, so that I will not be open to recover. Obviously the market will recover later on, but with a small deposit, your account may not be able to absorb the multiple spike coming. So that's why it is better for you to just set your stop loss, take out of the market, then you can recover your losses here. Alright, so I intend to make this video a very short one. Okay, so, and you can use our SR7, wait for it to pierce in. Okay, and then you enter into the market. I don't want this video to pass 10 minutes, right? So I'll just stop right here. You can watch my video on how to use RSI7 to trade. Okay, so here is another entry, RSI7, and then you enter the market. All right, guys.